Thank you. So delighted to be the host bank partner for this conference. Lloyds takes payments very, very seriously, and unfortunately what you now have to endure for the next 10, 15 minutes through our sponsorship is you have to listen to me talk. And I will try not to pitch you Lloyds Banking Group and all the great things we're doing in payments, and I'll try and talk a little bit more about the industry, but I apologise if I do go into telling you some of the things that we're doing at Lloyds. And Lloyds has worked with the Payments Association over, I think it's 4 years now that we've kind of been together. And in that time we've seen the community grow exponentially, which I think is a tremendous success where it is today, and I'm sure everybody's going to have a great day. And of course, during this period, we've seen some unprecedented changes, right? Whether that was, of course, the good old B word of Brexit, everything that happened then with COVID, and is still happening with COVID, and then of course the very, very unfortunate situation we now have today in Ukraine. But it's during these sort of times that unfortunately, whether it's geopolitical and economic stress, that payments demonstrates the critical role that they play in financial services, and the importance that we have to both national and global economies. And of course, sadly, the events that are happening in Ukraine have really brought into sharp focus the importance of payments, right? So, the Western nations, with all of the sanctions that have been imposed on selected Russian banks, has meant that we've, as a group of banks, removed them from the SWIFT messaging system. And that's no easy task, I can assure you. But what importantly means that, they are disconnected from the overall international financial system, and it obviously handles their ability to operate. But, and at Lloyds, I wouldn't like to tell you of the many, many amendments we've had to make to our sanction filters, and that's happened, and there's people listening to this conference globally, that's happened around the world with banks, and we've had to enact that. But importantly, we've managed to do it without disrupting the legitimate business flows. And of course, we've also seen on the card side, whether it was Visa, MasterCard, Amex, JCB have all actually stepped in and, of course, cancelled Russian-backed bins. And we've now seen PayPal step in and, suspend some of its services. And, of course, Apple, as you've seen, in Russia itself, have actually restricted Apple Pay. And that's something that all falls on the burden of everybody that operates in that payments ecosystem. But what the unfortunate situation does continue to highlight, with Russia is just the importance about how the world continues to manage its connectivity and its cross-border trade. So, key to this is the enhancements around cross-border payments that the G20 nations are looking to make, and they see this very much as a priority. The focus is very much on enhancing how cross-border payments work, in particularly around transparency, around the speed of payments, the value and the actual access. And actually, if we put all of that together across the globe, obviously that's going to result in far better benefits for citizens and economies worldwide. And that will facilitate economic growth, it will facilitate international trade, and it will help, most importantly, both global development but financial inclusion. And it's very important that we continue that momentum as we move forward over the next few years. And if that's talking about the global issues that we see, we need to focus back. What do we do? The majority of people in this room and on this conference, what do we do? We're very, very focused about UK payments, and the UK payments industry needs to continue to navigate these challenges. And of course, during COVID, we've seen some huge changes in terms of the way that our customers and ourselves all operate. The regulatory and industry changes we've seen have all worked together to deliver in a post-pandemic world a really good standard around payments. We work together to think about, how do we change open banking, right? The API standards that have been introduced, that's been exacerbated and extended through the pandemic. We've also looked about, how do we think about things like confirmation of payee? How do we bring more security into the system? And of course, things like the contactless limit, right? Remember, at the start of the pandemic, it was £30. It quickly went to £45. It's now up to £100. The faster payments limit during the pandemic is now up to £1 million for those those institutions that want to increase their limits on their systems to enable better propositions for their customers. And all of that's happened during a period of significant change. And that pandemic has really accelerated those changes, So it is about technology, but it's also the real improvement and the rapid pace around digitalisation of end-to-end customer journeys, but also in terms of the back office processes. Often, it's a two-sided of a coin here in terms of customer propositions. It's great to give the customer a great experience, but actually what happens at the back end and that digitalisation that's continued to happen there. The growth of e-commerce, who would have thought the amount of e-commerce activity? Yes, we were all buying things online pre-pandemic, but actually just think about the number of transactions you now make, the volume that goes through your bank account that's e-commerce as opposed to face-to-face, and how actually when you are face-to-face, how do you now access different payment types than you would have done before? And sadly, for a payments geek and somebody that's been in the payments industry for many, many years, I still have a soft spot for cheques and cash. They are still there. Actually, volumes, I would argue now, volumes are picking up from a pandemic level, but obviously we've seen a material shift in terms of cash and cheques and their usage because of this digitalisation that's happened. And that's meant that all businesses, both us as payment service providers, but also actually businesses have had to completely reorientate their capabilities, whether that's small, medium enterprises, are really encouraging about how they take different payment types for us, particularly as consumers or businesses who want to pay. And at Lloyds, we've really embraced that, right? I told you I was going to pitch, right? Lloyds, we have embraced that. Things like QR codes, pay by URL, and our real promotion of the open banking capabilities, has really transformed about the way we think about our business over the last couple of years. And that fits very much with what Lloyds Banking Group's purpose is, right? We are here to help Britain prosper. We are here to help businesses recover and grow back stronger. And I would argue we do that from a position of competitive advantage, right? We are one of only two, what I would call bank acquirers that exist in the UK marketplace today. We have full access to, direct access to all of the UK payments platforms, but also we have access to other platforms, payments platforms that operate outside of the UK. We embrace SWIFT. Many people don't want to embrace SWIFT. We embrace SWIFT for cross-border payments. And back to my point about physical cash and cheques, we have the largest UK branch network, right? That gives customers access to the ability to pay in cash and cheques. And importantly, what we do is we invest. We continue to invest in payments. There's been, as part of our group's results back in February, we talked about the investment that we're going to be putting into the business over the coming years. An awful lot of that is going into our core payment infrastructure, whether that's on the consumer side or where I work in the commercial banking side, to make sure we've got the right architecture in place. But more importantly, the more money we start to spend on what I would call innovation and discretionary activity to continue to improve the propositions for our clients. But this is the end of the Lloyds pitch. We don't do that on our own, right? We embrace partnerships. We embrace fintech. Fintech is a friend of Lloyds Banking Group. That was probably not the case 4 years ago. 4 years ago it was a threat. But actually as we move forward, we are here to work with fintech. We want to work with fintech in terms of developing new propositions. And we've seen that over the last 3 years. We've announced a number of strategic partnerships. Apologies for those that I don't now mention. But actually, if I think about in 2020, we announced a strategic partnership with Form3. Form3 are a cloud-native payment technology fintech. They're helping, they're helping us transform and enhance the digital experience for our customers. And that partnership, importantly, will help us get ready for the new payments architecture. And back in 2019, we invested in a company called Finality, a group that was formed as a network of decentralised financial market infrastructures to facilitate international payments. And that was using cash assets to help tokenise transactions. And then way back in 2018, so we've been at this for a good few years now, pre that Finality investment, we invested in somebody called Thought Machine, a UK growth stage technology company at the time, whose core product, Vault, is a cloud-native next-generation core banking platform. So we combine these forces with fintech to really embrace cloud-based tech services. It's very, very important for us. It's one way that we know that we can access and have the best technology and the best infrastructure. We can utilise the specialist knowledge that sits in these companies, and we can make it, most importantly, to the advantage for our customers. But equally, it's not all about innovating and working with fintech. I think actually one of the reasons that we've managed to progress over the last few years is actually the strong regulatory environment in which we operate. Now, back in the day, that was not always the case, but certainly, actually, if you go back to the financial market crash, I think regulation, particularly in the UK, has really evolved. It's embraced innovation. It's really looked to think about how we collaborate. And there's three core pillars to that regulation that we've seen. The first of these is about access. Right? If you go back, access to the payment systems is dramatically changed. There's a real recognition about PSPs and EMIs, a constituent part of the payments ecosystem, and need to have the access that they need to compete. Secondly, we need trust, right? And particularly during the pandemic, how do people understand when they've got a digital solution that you've got the necessary trust and security that you need in this business? And we see that just last week with SCA. We've seen that with confirmation of payee. All of that regulatory-driven investment is there to help our customers drive their businesses forward. And then there's control. Open banking PSD2 is very much given to using consent, access to data, far more control around the use of data. And we see that regulation will continue, and it will continue to improve, and I would particularly call out data. Right? We are stepping through a process at the moment around ISO 20022. That's going to improve for businesses how they can actually share and have interoperability between the various payment systems around the world in terms of the exchange of that data and hopefully the reduction in fraud. We see more and more around confirmation of payee, and there'll be further enhancements to confirmation of payee. I think there's something like more than 750 million COP checks have happened in the UK within the last kind of 18 months. And then this strong customer authentication. It's actually probably landed quite well in the UK, right? It was probably far more seamless in terms of the benefits to, consumers not falling out of online journeys, and the continued enhancement of that SCA as it embeds itself into our practices. And then, of course, we're going to see the rise of digital currencies. That will become a focus. There's a real increasing differentiation between the unbacked algorithmic coins and those backed by real assets. And you've seen that with the Bank of England. The Bank of England obviously consulting on CBDC. We're obviously a Lloyds an active participant in that, and you've seen the European Central Bank come out, right? And they're running a project around the digital euro that will probably run to the end of next year. And we will, using our knowledge and what we've learned from Anality, we will embrace that, and I would encourage obviously everybody to embrace that. So in conclusion, in Lloyds Banking Group, we are confident that we can navigate the payments challenges that we face as individual businesses and for our customers. We think there's a real all-round strength of the UK payments industry of which we all participate. People in a global context look to the UK. I was only talking to an Australian bank 2 weeks ago that wanted to share our experiences around open banking, faster payments and the connectivity that happens between there. But we're going to have to do that together, right? The collaboration we're seeing in the market now, you look at the stands that are out there where you've got banks and fintechs and other companies coming together. We are all in this. This digitalisation, this rapid digitalisation is going to continue, and therefore I look forward to hearing from other panellists as we talk through the day about how that's going to happen. But in the meantime, thank you very much.